Hey, in this video, we're going to talk about market cycles in crypto. The ups, the downs, the bad times, the good times, and the great times. Let's dive right in. Now, when you look at the crypto market, it's not unlike traditional markets. It has its ups, it has its downs. There's bull markets, there's bear markets, and a lot of people liken the crypto market to dolphins, with the constant ups and downs and the wild jumps, that all of us have seen. We have seen assets being wiped out 90%, 95%. This is unlike, obviously, the stock market, any of the large stock markets. It's been a highly volatile asset class. But there's reasons. It's much earlier in its innovation cycles than something as like stock markets. And, being more unregulated, it's prone to a high volatility. There's more speculation, and there's not a lot of holders actually in crypto. These factors create for an environment which makes it volatile. But what you'll notice is between each successive market cycle, like between two bull markets or between any two bear markets, the level of volatility is decreasing, and that's a good sign, which means it's maturing as an asset class. Let's look at the three factors that create these different market cycles: their adoption, innovation, and regulation. Now, how does adoption basically cause for a market cycle? Well, what you'll notice is in every successive market cycle, there's new entrants to the market, and a lot of these new entrants may not be retained by the market. They may not hold on to that asset class. They may leave that asset class completely, which causes a huge shift of capital outside these markets. Now, with crypto especially, there's so much innovation, there's so many new products, there's so many ways for people to look at this market that, a lot of new people look at it, but they also end up leaving because they realize that it may not, in every market cycle, they realize, in terms of innovation. Now, this is where we are getting into our second point, which is, the innovation is not there yet, right? It's impressive, but it's not really solving those problems that people envisioned, or sometimes people are even imagining the innovation to solve problems that it may not actually be solving. They're just, wishing for too much. And when that realization kind of strikes in, there's a good shift of capital out of those markets. Another very interesting angle is regulations, because governments cannot control a lot of cryptocurrency, especially the more decentralized forms like Bitcoin, right? Governments have not been able to control it, and that's the reason it's even sustained. But at the same time, it's gone through volatile periods. It's gone through huge ups and downs. That's because people are sometimes aligned with what the government's thinking, the tax regulations, and various considerations like these, which causes a shift into the markets and also shift out of the markets, because there may be conditions where it's more conducive for people to invest in Bitcoin, especially as a hedge against inflation, right? But it really comes down to these factors, and hence there's market cycles. Now, within these market cycles itself, one of the measures a good investor or trader, whether retail trader or investor, or whether accredited or institutional investor or trader, is to look at the dominance that Bitcoin has and the percentage of the total market cap that Bitcoin holds, right? Like if it's 60%, 70%, how much of the rest of the ecosystems like Ethereum or some of the other L1s and L2s, what level of the market cap are they holding? What you'll notice inside a specific bull market is initially the Bitcoin dominance goes high, in which case Ethereum and all the altcoins are fairly suppressed, and then Bitcoin takes a dive down, and the rest of the market, the altcoins, Ethereum, they start to rise. So there is a shift of capital from Bitcoin to Ethereum, and from Ethereum to all the other altcoins or all the alt networks. What's going to be interesting in the bull market, which may come up close to the Bitcoin halvening, it's not just going to be Ethereum this time that's going to dominate, which is going to be a significant taker of the rest of the market after Bitcoin. It may also be other alternative L2s, L3s, and L1s also. There's a lot of new chains that have come up. There's a lot of new ecosystems that have been born, and they are also going to absorb a lot of the capital and create a lot of the capital as well in these markets. So yeah, getting back to my point with the Bitcoin halvening, generally if you want to time a bull market, it's usually around the Bitcoin halvening. Now, if you want to find out when a bull market is going to happen, a good indication of that is to look at Bitcoin halvening. If Bitcoin halvening is happening next month, then you can expect the bull market to be around this time, maybe plus or minus 2 months. Around this time is when everything awakens in the crypto ecosystem. So good luck. Like this video, subscribe, and there's a lot more coming up, especially for you entrepreneurs, traders, and enthusiasts in crypto and otherwise. If you like business, you like technology, then Decoding Venture is what you follow. Stay tuned, guys. There's a lot more coming up. See you, hustlers. Peace.